Devina Mehra, Chairperson and Chief Investment Strategist with First Global, joins us now. Devina, good morning. Thank you for joining us. Devina, if I look at Wall Street, the bears are saying they are the boss. If I look at Indian markets, the bulls are saying who's the boss. So who's the boss?
Maybe it's slightly different for the global and Indian market. If you remember, right from the end of last year, I had been saying that India would be an outperformer this year, just as it was in 2021, which was after a long, long gap. So that has held up. It has been an outperformer, and that would well continue for some time. That's the way we look at it, and so India is definitely in one of the outperforming baskets. US, particularly outside the tech space, also looks to be moving to the outperformer mode, as are a couple of other markets like Canada, Indonesia, etc. So that is there. In India, I mean, I see some volatility, but not a huge downside as of now. Of course, we are not where we were. I mean, in June, I remember I was in on your channel and I had said that now is the time to get back in both India and particularly in India, but also in the US. And I was just checking. That day, the Nifty was 15,293. That's where it closed on that day. So it was a very sharp move since then, in the 2-3 months since then. So obviously, I mean, you're not going to see that in the next 2-3 months, but I don't see a big downside either.
I remember that was a great call. You said that look, when markets will come back, they will not tell you, they will not give you a chance. So it's time to stay invested. My next question is that let's look at India's positioning. The size of the economy. We are the fifth largest in the world. We are amongst the top 10 markets in terms of market cap. We were the second richest man in the world who's in India now. So the pure size of India is so large that what is happening in the world cannot be ignored. For how long do you think we will remain Teflon coated?
No, we are not Teflon coated. So you have to look at what is happening in the world, and you have to look at how it impacts your companies, particularly some of the commodity prices, which also have spoken about how they impact different sectors. And as I've also said throughout this year, that it is not going to be the tide lifting all boats kind of market this year. So you have to be choosy. So you have to look at those things. Obviously, I mean, while the size of the economy becoming number 5, all that is great, but also you have to look at the fact that your per capita income is still not where it was even 3 years ago. So we have not come out of that COVID blow as far as the person on the street is concerned, even though, of course, as you said, that we have now the second richest person on earth in India, which you would not have forecast that easily. So that is not a forecast that I had made. But the fact is that there are things to worry you in the economy. As I said, per capita income, which means that how much buying and purchasing power is there in the economy is one thing. There's on the BOP front also, the deficits are beginning to worry me slightly. So it's not as if everything is hunky dory.
Devina, hi there. Good morning. Let's get in your outlook in terms of what has been some of the recent additions to the portfolio. Have there been any specific sectors that you've looked at fairly closely? There is a large exposure to industrials, financials. You have maintained that. A couple of months ago, you as well spoke about performance within the FMCG sector that was looking promising and how you added stocks within that space. What's been the update?
Right, industrials still remain the biggest overweight for us, and they have done a lot of good to the portfolio in the last few months and quarters. So we've been overweight for a while, and quite significantly overweight. So industrials, capital goods, that category, and that's worked out well. We still like that. Autos has been one area which we didn't like in the past, and we like better now, at least selectively. Financials, as I have spoken earlier, we had negligible weight. We are still underweight. We'll probably now thinking of going to market weight. The only thing is, the financials are so large a percentage of the index that one is always a little queasy going to that kind of number. Uh, Other than that, FMCG not as a category, all of it, but we do like a couple of stocks. We hold a couple of the large FMCG names. And what else? As I said, yeah, this would be broadly. I mean, IT we like. I mean, I know there are like very divergent views on IT now that it has come down a fair amount. We could. I mean, we're not hugely overweight in IT, but we still continue to like it generally.
Devina, just to understand the positioning of IT, and I've got this wonderful report from CLSA, which in a sense makes a very tall claim that IT outsourcing is here to stay. IT companies have become cheap, the cloud migration is real, and historically, even though global recession has had an impact on IT, ultimately these models have survived. Do you think there is too much of fear in IT companies now? I mean, look at it, stock like TCS, it's available at dividend yield of 3%.
Yeah, I mean, as I said just now, I continue to like IT. It is now we are not hugely overweight, but we would still be somewhat overweight. And I mean, the predictability is reasonably high in those stocks. It is also currency hedge. I mean, they went through a somewhat tough time, mainly on the some margin compression, but it's like no disaster in the making. Uh, and as even in times of recession, I don't see a big cut in IT spending, and particularly since anyway you are the inexpensive option within the scheme of things. Indian IT companies will face that blow uh, the last. So I mean, other than that, on the employee front, which also to some extent the pressures are easing because the startup ecosystem is no longer as attractive. That pressure will ease. So that I'm still reasonably bullish on IT.
Devina, I'm very curious to know what you think of the Adani Group names, because a lot of market participants have completely steered clear of it. But obviously, someone's making money. I mean, look at what the stocks have done in the not just recent past, the fact that they have moved up in the last 2 years the way they have. And, I mean, the Adanis are now going to be owning the second largest cement company in the country. As of yesterday, they're going to be building a port with an investment of 25,000 crore rupees in the state of West Bengal. You can't deny the expansion and the kind of growth trajectory that the entire group is at.
Yeah, no doubt. I mean, no doubt. I mean, that is there for everybody to see in the market cap and the movement of Mr. Adani up the rich list and all of that. But also there've been some concerns on the how much floating stock is there. So till now we have, I mean, in terms of disclosure, we have not invested in the group, but we are now looking at it to see which are the pockets to one can consider.
I'm just going to mark the markets for a second now. IndusInd Bank right up there. You got IT, which is not falling today. You got mid and small cap stocks, which are giving it some company. And the breadth of the market has been the biggest highlight in terms of the high feature or the high point of the day. So the breadth of the market is something which has been the most incredible point about the market. Devina, the breadth of the market is telling us a story that with each passing day, more and more mid and small cap stocks are getting re-rated. Now, would you call it as a bit of a tinge of bubble, or this is re-rating at large?
Do we think that mid and small caps will somewhat outperform the large caps? I mean, which has been happening. And if you look at calendar year to date, there is a reasonable difference between the Nifty 50 and Nifty 500. We think that re-rating will continue for now. I mean, we are reasonably positive on that. Of course, as portfolio managers, we still tend to be somewhat cautious of small cap exposure going beyond a point, because reversals in small caps can be equally brutal, and liquidity can dry up very fast. So we are a little cautious on that front, because as a asset management house, we are cautious, and we prioritize risk management first, which has served us very well in terms of the performance. But in terms of how the market looks to us just now, yes, it appears that mid and small cap will outperform the large caps.
Devina, great to have you on the show. Good chatting with you as always.
Thank you.